Filing taxes is really nobody's idea of a good time, but one small joy you can get from it is in watching your tax bill go down as you add in deductions and credits. But what exactly is the difference between a tax deduction and a tax credit? Aren't they kind of just interchangeable? While both can be good for your final tax return, they are very different. First up, let's look at tax credits. A tax credit reduces your overall tax liability. So if you have a $1,000 tax credit, that means you no longer owe $1,000 on your taxes. A tax deduction reduces how much of your income gets taxed. Let's say you have a $1,000 tax deduction. It is applied to your top income tax bracket. So if you made $55,000 last year, your top tax bracket is 22%. That deduction means that $1,000 of your income won't be taxed. So you save that 22%, which would equal $220. This all makes tax credits sound pretty great, right? Most of the time, yes, but there are some catches. Many tax credits aren't refundable. What that means is, let's take this $1,000 tax credit again. But let's say you only owe the IRS $600. You don't get that extra $400. Not all tax credits are non-refundable, but many popular ones, like the Lifetime Learning Credit, are non-refundable. Some examples of refundable tax credits include the Earned Income Tax Credit and the Child Tax Credit. So if your $1,000 tax credit is refundable instead of non-refundable, and you owe $600, that means you will get that $400 as part of your return. Deductions are a little different. Everybody gets a standard deduction, which is $12,200 for single filers and $24,400 for married filers. The standard deduction is simpler and for most people makes more sense than doing itemized deductions. It can be time-consuming and complicated to itemize all of your deductions one by one. But you might save some more money if all of those itemized deductions add up to more than the standard deduction. And there are a lot of deductions. Some common ones include student loan interest, medical expenses, property taxes, and interest on your mortgage. If you decide you do want to itemize your deductions, it might be worth talking to a professional to make sure that you don't miss any deductions or make a mistake. In the end, there are big differences between credits and deductions, but both are worth researching because you might be able to take a lot off your final tax bill, and hey, you might even get a refund.